Here is an important update regarding computation of fair market value of capital assets for slump sale. Central Board of Direct Taxes issued certain rules prescribing methods for computing fair market value of capital assets of an undertaking transferred under a slump sale, and the same is notified through notification number 68/2021, dated 24/05/2021. Here comes the background for this notification. The Finance Act 2021 has amended Section 50B. Clause 2 of subsection 2 of Section 50B states that fair market value of the capital assets, as on the date of transfer, calculated in the prescribed manner, shall be deemed to be the full value of the consideration received or accruing as a result of the transfer of such capital asset. In exercise of powers conferred by Section 50B, read with Section 295 of the Income Tax Act 1961, CBDT has inserted a new rule. Rule 11 UAE. Rule 11 UAE provides that for the purpose of Section 50B, the fair market value of the capital assets shall be the higher of the following: FMV 1, determined under Subrule 2, or FMV 2, determined under Subrule 3. The FMV 1 shall be the fair market value of the capital assets transferred by way of slump sale. The FMV 2 shall be the fair market value of the consideration received or accruing as a result of transfer by way of slump sale. Fair market value of the capital assets shall be the higher of FMV 1 or FMV 2. Let us discuss the formula for computing FMV 1 and FMV 2. FMV 1. FMV 1 shall be the sum total of the components A, B, C and D, reduced by L. Let us go through in detail regarding these components. Component A. Component A is the book value of all assets, other than jewelry, artistic work, shares, securities and immovable property, as appearing in the books of account of undertaking transferred, as reduced by the following amount which relate to such undertaking. A. Any amount of income tax paid, if any, less the amount of income tax refund claimed. B. Any amount shown as asset, including the unamortized amount of deferred expenditure, which does not represent the value of any asset. Component B. Component B is the price which the jewelry and artistic work would fetch, if sold in the open market, on the basis of the valuation report obtained from a registered valuer. These are the key points connected with Component B. 1. Price it would fetch in open market, and 2. Valuation by registered valuer. Component C. Component C is the fair market value of shares and securities, as determined in the manner provided in Subrule 1 of Rule 11 UA. There are three categories provided in Subrule 1 of Rule 11 UA. 1. Valuation of quoted shares and securities. 2. Valuation of unquoted equity shares. And 3. Valuation of unquoted shares and securities, other than unquoted equity shares. Component D. Component D is the value adopted or assessed or assessable by any authority of the government for the purpose of payment of stamp duty in respect of the immovable property. Component L is the book value of all liabilities, as appearing in the books of accounts of undertaking transferred, but not including the following amounts, which relate to such undertaking. A. Paid up capital, in respect of equity shares. B. Amount set apart for payment of dividends, on preference shares and equity shares, where such dividends have not been declared before the date of transfer, at a general body meeting of the company. C. Reserves and surplus, by whatever name called, even if the resulting figure is negative, other than those set apart towards depreciation. D. Amount representing provision for taxation, other than amount of income tax paid, if any, less the amount of income tax claimed as refund, if any, to the extent of the excess over the tax payable with reference to the book profits in accordance with the law applicable thereto. E. Amount representing provisions made for meeting liabilities, other than ascertained liabilities. F. Amount representing contingent liabilities other than arrears of dividends payable in respect of cumulative preference shares. We have arrived at the value of FMV1, now we can move on to the calculation of FMV2. FMV1 was regarding the valuation of capital assets transferred, while FMV2 is related to the fair market value of consideration received or accrued. FMV2 shall be the sum total of the components E, F, G and H. Let us go through in detail regarding these components. Component E. Component E is the value of the monetary consideration received or accruing as a result of the transfer. Component F. Component F is the fair market value of non-monetary consideration received or accruing as a result of the transfer, represented by property, referred to in Subrule 1 of Rule 11 UA, determined in the manner provided in Subrule 1 of Rule 11 UA. For the property covered in that subrule, the following are the properties covered in the subrule: A. Jewelry and artistic work, and B. Shares and securities. Let us move on to the details of valuation of property, referred to in Subrule 1 of Rule 11 UA. A. Jewelry and artistic work. 1. Fair market value shall be the price which it fetches, if sold in the open market on valuation date. 2. If received by way of purchase on valuation date, from registered dealer, fair market value is the invoice value of asset. And finally, if received by any other mode, and value exceeds Rs 50,000, then fair market value is the price it would fetch if sold in the open market on the valuation date, may be based on the report of registered valuer. Valuation of quoted shares and securities. If such quoted shares and securities are received by way of transaction carried out through recognized stock exchange, fair market value shall be the transaction value as recorded in such stock exchange. If received other than through any recognized stock exchange, fair market value shall be A. The lowest price of such shares and securities quoted on any recognized stock exchange on the valuation date, and B. The lowest price of such shares and securities quoted on any recognized stock exchange on a date immediately preceding the valuation date, when such shares and securities were traded on such stock exchange, in cases where on the valuation date there is no trading in such shares and securities on any recognized stock exchange. Valuation of unquoted equity shares. Fair market value is arrived using the formula FMV equals A plus B plus C plus D minus L multiplied by PV and divided by PE. Here also A, B, C, D, and L have the same meaning as mentioned earlier for FMV1 calculation. The values as appearing in balance sheet of respective company as on the valuation date needs to be adopted for each of the components. PV is the paid up value of such equity shares. PE is the amount of paid up equity share capital as shown in balance sheet. Valuation of unquoted shares and securities, other than unquoted equity shares. Fair market value of unquoted shares and securities, other than equity shares in a company, which are not listed in any recognized stock exchange, shall be estimated to be the price it would fetch if sold in the open market on the valuation date, and the assessee may obtain a report from a merchant banker or an accountant in respect of such valuation. Let us return to the components of FMV2. Component G. Component G is the price which the non-monetary consideration received or accruing as a result of the transfer, represented by property other than a movable property, which is not referred to in Subrule 1 of Rule 11 UA, would fetch if sold in the open market on the basis of the valuation report obtained from a registered valuer in respect of property. And finally, Component H. Component H is the value adopted or assessed or assessable by any authority of the government for the purpose of payment of stamp duty in respect of the immovable property, in case the non-monetary consideration received or accruing as a result of the transfer is represented by the immovable property. We conclude that fair market value of the capital assets of an undertaking, which is being transferred under a slump sale, shall be the higher of FMV1 or FMV2, as arrived by the methods which we have discussed now. Now comes the question regarding the date as on which FMV is to be arrived. The valuation has to be done as on the date of slump sale.
Visit www.incometaxindia.gov.in for notification number 68/2021, dated 24/05/2021. Thank you.